Welcome to Insights into Insurance from the A-Team at Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's another Saturday morning. That means it's time for Insights into Insurance with Americana Insurance. And we have a special guest this morning as well. Tom Sorensen, as always, on our Saturday morning. But Jolene Honkamp with JH Financial is with us. Good morning, guys.
Good morning, Mike.
And we'll kick things off as usual, Tom. It looks like we got another email question.
We do. Great email here. It's from Sheryl. I'm a weekly listener, and I have a question. I heard one of the programs discuss long-term care, and I talked to a friend that had purchased one of the different types of insurance products mentioned. Could you give more information about the product? I think you called it a hybrid product that combines the long-term care and the life insurance all as one. And that was from Sheryl.
So we'll let Jolene jump right on that one.
Yeah, Jolene.
Good morning. For those who haven't heard me on the radio program, I'm Jolene Honkamp from JH Financial. I have a partnership with Americana Insurance, and my office is located within Americana Insurance. My expertise is on the financial side of insurance, the life, long-term care, disability, and business and land succession planning. And I have about 23 years in the industry.
So a lot of experience. So I think Jolene will be able to answer this question to Sheryl. It may be a lengthy one, but let's jump into it, Jolene, and kind of answer that email from Sheryl.
Sure. Sheryl, I'm glad you asked for more information. The product is a hybrid product, and it's called Care Matters, and it's offered by Nationwide Insurance. It's a perfect solution for long-term care needs for people who have what's sometimes referred to as lazy money or assets. And this would be money that would be in CDs or other vehicles that really isn't working too hard, producing a lot of gains, and that really isn't needed as part of a retirement program. It's usually money that people set aside for an unexpected emergency, like long-term care. And if it's not used, it just goes to a beneficiary.
Okay, let's back up a little bit here, Jolene, and talk about lazy money. We're not talking about a lazy person. We're talking about money that maybe, as you stated, is not figured into your retirement costs. So when you're figuring out your monthly budget, it really is kind of money set aside for the long-term care or extra life insurance.
Right. It's there's a lot of people out there that have money outside of their retirement program, and they just keep it in other investments. As you know, the interest rate market is very low. So if they have it in CDs, it is really not producing a lot of income for them. So the true strength of this product, the way I look at it, is you are just repositioning those dollars into a different vehicle, and you can leverage those premium dollars for long-term care, life insurance, and you're also not losing any money if you change your mind. So that principal is guaranteed.
And this is something that people should really take part of, because it is a vehicle, as you say, Jolene, that can actually leverage those premium dollars, and you're not taking extra money out of your back pocket to pay for those different
Correct.
types of life insurance.
Right. You're just taking that money that you have and putting it in a different vehicle. And there's 3 ways that you can pay the premiums, and those premiums are guaranteed. They'll never change. So you have a single premium, I like to say one and done. You have a paid-up policy. You can pay over 5 years and have a paid-up policy and pay those premiums monthly, quarterly, semi-annually, or with an annual premium. And you also have those options for a 10-year premium. But the longest you can go is 10 years, and then that policy is paid up.
And again, these are 3 different types of single, as you say, 5-year, 10-year. But really, as we've talked before with Tom at Americana Insurance, you're putting those puzzle pieces together to make sure that you have the puzzle in place. It's a nice puzzle. You're not missing any of the pieces. And as we say, it's not pulling that extra money out of your bank account, out of your back pocket. It's all figured into your retirement. And really sitting down with yourself, Jolene, and putting this whole package together, people can understand where their retirement money is going to be spent at, if it's long-term care or extra life insurance.
Correct.
And Mike, you just need to know that, I mean, this product, it's a great product. It's I'll be honest with you, it's not a product that somebody is going to probably be interested in if they're living paycheck to paycheck. Okay, this is people with assets, and it's a good place if they got this money sitting there. It's a lot easier and less expensive to protect the long-term care situation than if you were to have that situation in the future. It's a great way to repositioning the money.
And part of that too is, as Jolene maybe talked about early on here, if you don't use the money, it goes to a beneficiary, and that can open up a whole new can of worms if you're not having the LTC or extra insurance brought in there.
Right. And how this product is set up, first, it's a long-term care product. So just like if you would do a traditional product, you're going to pick your monthly benefit. You can start at $2,500 and go up to whatever amount you need. You pick a benefit period. You can start at 2 years and go all the way out to 7 years. Or you could solve, if you have an amount of money sitting out there, you could say, hey, Jolene, what would $100,000, what kind of benefit would that purchase? So there's ways you set that up. You can add an inflation rider so you can keep up with the increasing cost of long-term care. And then that long-term care portion is built on top of a universal life policy that is guaranteed to age 120. So it backs into the life insurance amount, and it's guaranteed. Normally that amount is higher than your premium, but it's guaranteed never to fall below your total premium payment. So you're going to have your long-term care, you're going to have life insurance that's going to go to a beneficiary either above your premium, total premium payment, or at that level. And it's also considered a premium refund product. So once you make those total premium payments, if you decide to cancel your policy, you have access to all of your cash, and if there was any interest made along with that, since there is a 2% crediting rate, you would get that too. The one exception would be if you pay with a single premium that is subject to a 5-year vesting schedule. So after that 5 years, you would have access to that full premium recovery if you change your mind.
A lot of information this morning on the long-term care life insurance with Jolene Honkamp with JH Financial. As we're talking about the investments for long-term care on our Insights to Insurance program on this Saturday morning. We've got a lot more to talk about. Some of the features that included, and we're going to go over a couple examples, Jolene, when we come back. So let's take our first break, and when we come back, we'll talk more with Insights into Insurance with Americana Insurance and Jolene Honkamp with JH Financials.
Nationwide is on your side. You have a side that is retired, playing tag and getting tired. A side that owns your own store. Looks like you need to explain some more. That's why there's a Nationwide to help protect and grow your many sides. Nationwide is on your side.
Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio.
For all your many sides, there's Nationwide. Call Americana Insurance Group in Albert Lea and Wells today.
Welcome back to Insights into Insurance with Americana Insurance. Tom Sorensen in studio with me, myself, Mike Whitus, and Jolene Honkamp with JH Financials. Jolene, we're talking about LTC and insurance. Let's talk about some of the important features that would include in this type of policies that we're talking about.
The one thing that sets Nationwide Insurance apart from some of the other carriers that offer a similar product like this is it is what's called an indemnity policy. So what that means is once you qualify for care using the same definition as you would for any long-term care policy, needing assistance with 2 of the 6 activities of daily living or cognitive impairment, that monthly amount of your benefit is paid directly to the policy owner. So no receipts are going back and forth. Nothing needs to be reviewed except, just qualifying for that benefit. And there's no reimbursement on the back end. Once you qualify, you get that monthly amount paid out to the owner. If you're not going to use it all, you can put it in a money market account so it's available to you at a later date. But this allows you more freedom with that benefit because you can pay unlicensed caregivers. So you can pay family, friends, or neighbors to come and do things for you. You can use it to make changes in your home. So it gives you the option to stay at home longer. I like this because, as I said, it gives you options.
It gives you the flexibility, and one of the things I see in here is giving for those folks maybe taking care of an elderly person. It's a burden for those people to
Right.
take care of them, be it family, friends, or maybe even you're helping out a neighbor. It seems like you always want to give that person some extra money.
Right.
And with this type of a policy, it's a very important feature where a lot of times if you're going into a home to help a family member or a friend or a relative, they say, no, I don't want to take any money.
Right.
This type of policy, there is no guilt on that person that's helping out because it's part of an important feature.
It is. It's a great feature. There's not too many policies that offer that indemnity portion. This is one of the only policies that I know of that still gives a residual death benefit. And what I mean by that is that if you use every dollar that you purchased in this policy for long-term care, and you used all of that, what I call a pool of money, your beneficiary will still receive 20% of the minimum death benefit guaranteed.
And for someone that wants to get involved in this, is it a lengthy process, Jolene, as far as qualifying for this type of a care?
It isn't. What I usually do is pre-qualify them. It is going to be underwritten, but it normally is done with a telephone call. So it's probably a 40-minute telephone call. They go over medical. Companies do have access to pharmaceutical databases. They look at the Medical Information Bureau, so they can gather a lot of that information, and normally I get a decision back on this within 2 days.
Yeah, Jolene, you just have an example, I know, of somebody that you worked with that bought this product, and you kind of just go over that just so that the listeners can understand how it works.
Right, and going over a case will really tell you the power of this product. I worked with a 55-year-old woman, and she had over $100,000 in CDs making, probably 1% interest.
Yeah.
So growing very slow. She did not have that earmarked for anything except for an emergency. So we took $100,000 of that money, moved it over into this product. So like I said, repositioning that money into this product. There is a guaranteed 2% crediting rate within this policy. And here's what it did for her. On the long-term care side, that $100,000 gave her $541,000 that she could use for long-term care. That translates to $7,517 per month that would pay her out for 6 years for long-term care services. So you receive the biggest payout to be used for your long-term care needs. And what this translates to her is, with this policy, she pays 18 cents per dollar if that care is needed. And when you have a CD, that $100,000, you're paying dollar for dollar. So she's really leveraging that money to pay out. And looking at that $541,000 for long-term care, she has a 6-year benefit before that runs out. With the CD, it gives her a little over a year. So there's not a lot of protection there. And anything else comes out of pocket once she runs out of that money if she left it in the CD. Otherwise, you have to spend down assets, and that would include the possible sale of farmland. So that can be devastating.
Absolutely.
So if she uses it all for long-term care, she has $541,000. If she does not use it, a life insurance benefit would be paid out to her beneficiaries of $180,000. So that's still quite above the money she put in. So that's a good return on her investment. But if she used all of that $541,000 for long-term care purposes, her beneficiaries would still receive 20% of that death benefit, so they'd receive $36,000. So that gives her, you're getting close to $600,000 from that $100,000 deposit.
Right.
She would have access to all of her premiums. Like I said, a single pay, there's a 5-year vesting period. So in that 6th year, if she changed her mind, she would have access to all of her premium dollars. And if it did grow any interest, she could pull out that as well.
And again, this is just one example. We're using a lady that you have worked with, Jolene.
Right.
It doesn't have to be $100,000.
No.
It could
Correct.
be any really dollar amount that you can put that puzzle piece together and help out that individual that does have, maybe they do have $30,000 loaded into CDs. we're just using this $100,000 that you've worked with this lady before. I don't want our listeners to think, well, I don't have $100,000 available in CDs. You don't need a certain dollar amount to guarantee you that you're available for this product.
And everything here that I went over, that's all guaranteed. So none of that is going to change. They show you what is guaranteed, and that's why I call it a wealth transfer, because you're taking it from one vehicle and putting it in this vehicle, but you can see the amount of leverage you have on those dollars for long-term care and life insurance, even if it's going to go to your beneficiaries.
A lot of great information with Jolene Honkamp with JH Financials. And Jolene, how would they get a hold of you to set up that appointment and kind of put the puzzle pieces together?
If anybody wants to look at a product like this, I'm in the Americana office, so they can just get a hold of me at Americana at 507-377-2000.
All right, Tom, that was a fast, wrapped-up Saturday, but a lot of great information. It goes fast. And
by the way, any of the money you make is lazy, because I know that.
All right. Well, we'll leave on that note. After a rainy week, Saturday and a little rainy, but tomorrow is going to be a good day. And happy Mother's Day to all our listeners out there. Yes. On behalf of Americana Insurance and JH Financial, that's going to wrap up our Saturday morning program here with Insights into Insurance with Americana Insurance on 1450 KATE.
You've been listening to Insights into Insurance from the Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.